Time to put the spotlight back on the markets. Deven Choksey on the fundamentals, Naresh Marani and Kunal Bothra on the technicals. Naresh, let me begin by asking you, there's a bit of a slip from the highs that we have seen. Worrying, or is this something which you expected? Deven, Naresh will have to unmute, yeah.
Yeah. So if you look at the markets, what we've been seeing for the last 3 weeks is we see one big day wherein there is a lot of volatility and markets make a 500, 600 pointer intraday move. And for the next 3, 4 sessions, we just continue to be in this band. So we saw this on Friday. Now we are back into the move of say roughly 23,500 to 24,000. So we are still stuck in the band and there is no follow-up price action as such. Even the small cap indices are almost on the flatter side. So for now, we wait for either of these price points to break to look out for another trading band.
So that's a view coming in at the index level. Kunal, today the banking index has clearly been the underperformer. What do you make of it, and is that the likely trend for the next 10-15 days?
Well, I would not call it as an underperformance, Nisha, but I think it's more of a range-bound action for the indices as well as for the Bank Nifty. Now, I'll call it range-bound because 3 days back there was a range of almost 700 to 800 points for the Bank Nifty. Yesterday, when the indices recovered, the range for the Bank Nifty on intraday basis was just around the 300-350 points, for the banking index on the spot basis. And today's price action indicates that it's a range of almost 200 points netted for the Bank Nifty. So which means that what we are going through is a process of very narrowed or a contracted range for the banking index. What matters over here now are two important levels to watch out for. One on the upside would be 51,500, which is yesterday's high for the banking index. That would act as a major breakout level. So right now it's acting as a resistance. But in case if the Bank Nifty manages to break past about 51,500 mark, that's where I would believe that you might probably see an accelerated momentum coming back into the banking index. And on the downside, I would believe 51,000 on the spot levels could be acting as a support. So we could be looking at next few days of very listless kind of a price action or a very contracted range for the banking index.
You're coming in on the banking index. Gentlemen, this is Snehi also joining in on the show. Good afternoon. Deven, coming to you. I want to take that point further on the banking index. PSU banks have been shaky over the course of the week, but did see some strength coming in yesterday's trading session. What's the outlook on playing the entire banking space with your Pick B private banks or the PSU banks?
Well, on one side, one tends to believe that the rate cut scenario will emerge stronger somewhere closer to the February. And also, I think once the government gives indication about the spending budget, etc., on the infrastructure, it is expected that Prime Minister's meeting today with economists is also going to play a meaningful role in form of arriving at, I think, some consensus on pushing the growth forward, for which I think the rate of interest needs to come down. Though the bankers differ on this particular proposition, but my take is that I think unless the rate of interest comes down, I think which is not going to happen in one quarter, it is going to be a process of few quarters hereafter. Unless that rate of interest comes down, I think investment is not going to come in hurry as far as infrastructure is concerned. So given that particular challenge, I believe that I think the sooner than later, I think this particular expectation of reduction in rate of interest will materialize. And should that happen, then probably I think the immediate beneficiary would be some of the large public sector banks, because their mark-to-market gain on the bond portfolio will start looking up, and that's where probably I think the market will follow. At the same time, I think this budget would be an interesting one if the finance minister gives indication about further consolidation of public sector bank. Should it happen, probably I think you are likely to see the higher amount of participation of players into the PSBs in the marketplace.
Okay, that's the outlook coming in on PSU banks. Naresh, want to get a sense from you from the outlook that you have on the entire capital goods space. We have reports that have emerged recently that say that India is mulling relaxation of a quarterly spending limits. How do you think this is going to affect the entire capital goods space, especially the likes of infrastructure going ahead that the budget is now coming closer? What's your take on this, and what are the stocks that you are liking from the cap goods space?
So we've been continuing to listen to the fact that there should be more spending in the H2, but we are already in December right now. So how much of it gets punched up in the next quarter? But if you look at the price action, that is not great. So if you look at something like a Siemens, the stock has made multiple attempts around 8,000 back to 6,500, and that is what has been going on for the last 6-8 months. L&T tried to make a breakout move about 3850, went into a new all-time high, and now we are back to 3600. So for now, it seems like a consolidation move for majority of the names, whether it is ABB, Siemens, or even the mid-cap side of it. But I would be interested in L&T because that's the one which did not see a massive run going into 2024. So that's a consolidation where on dips to 3500 to 3300, one could be looking at a accumulation zone. And the next time it goes about 3850, it could actually make a breakout leadership move.
View coming in on some of these industrials, but talking about industrials and taking a leaf from that, Deven, what's your sense of the electronic manufacturing space? I mean, one day it's Amber, which is up, one day it's the turn of Dixon, Keynes, SGS, EPAC, Durable, PG, Electroplast, all of these keep on moving in tandem one day or the other. What do you make of the entire pack, and what within this would you prefer?
I guess I think the EMS definitely is particularly the ones which are in the consumer durables. They are the ones I think which are largely seeing the large amount of growth. Also because of the fact that I think one after another OEMs I think coming into the companies which are already into this space. You mentioned those names. In my viewpoint, I think yes, I think the opportunity size is growing and growing big, but at the same time everything is priced in. So unless you see a meaningful price correction into the stock, I would not think that I think immediately it makes buy opportunity. Maybe I think if you are not seeing the price correction, then we'll have to tag along with the higher valuation for a reasonably good time till the time the valuations are driven by the momentum. But I think that's a call that one has to take as a trader, not as an investor.
Close to the lowest point of the trading session. That's how it's panning out for now. SPI, Infosys, these are the big drag at the index level. Having said that, let's also address some of the stocks and news right now. Tata Investment is the stock which is buzzing around, and so is Tata Motors. That's, of course, because ET reports suggest that work has started on the $2 billion IPO, that is Tata Capital. So the stock is in focus on account of that. Biocon is also buzzing away in the trading session after its European partner Zentiva has received an approval for its complex formulation. So we are watching out for that one. Gulf Oil is in focus because it's teamed up with Nayara Energy to bring the premium automotive lubricants to the fuel stations nationwide. So that stock is also in focus. And we're also watching out for Greaves Cotton because one of its subsidiary has filed for IPO or filed the DRHP for now. So that stock is also in focus. Naresh, what's the sense on the charts of Greaves Cotton as well as Biocon?
So Greaves Cotton has made a large move in the last, say, 2 weeks, wherein we saw a big gap up move, and we went back to the 260 mark. Now, 260 was the high the stock made back in 2022, and the stock has been sideways for a very long period of time. Even back in 2000, say 17, 18, the stock used to be 170, so it's not been a great return from that point of time. But for now, 260 is a resistance. If it sustains above those levels, we get into a further up move possibly, and one would have to keep a strict stop loss at 240. Biocon, a name which has had multiple starts, but 380, 385, and 310 has been the range for the stocks. For now, we are in the middle of the range.
Okay, so that's the take coming in on both of those stocks. Deven, coming to you now, we just spoke about Biocon. If I take a look at the year-to-date moves coming in of all of these sectors, you of course have realty on the top over there, but pharma is closely catching up. You have 37 odd % gains coming in on realty, pharma somewhere at 34, so quite close to being the highest sectoral mover on the year-to-date basis. Tell us what sense are you making of these moves that we've seen in the pharma space, because it's not been an even year for the pharma space. They have seen a gap of gains and losses coming in. So tell us what's the outlook going ahead, and how good is this going to be as a defensive sector going into next year as well?
Well, I think pertinent point out here is on one side, the complex and the specialty generics pharma companies are the ones I think who are taking the maximum advantage out of the current situation. The likes of Dr. Reddy's, Cipla, Sun Pharma have actually their share of portfolio of products which they have put into the advanced markets like US, where they are fetching better realization, and at the same time, I think relatively less amount of competition on the product as well. So that is fetching them better margin because of the pricing power that they assume on some of the specialty products. At the same time, the pipeline inventory, which used to be on a higher side, actually came down, and that helps, I think, most of the pharma companies root across better margin performance. And that's what I think one has experienced in the last few quarters. Going forward in 25, I believe that I think the situation by and large continues for them. the growth in the business is continuing from the new launches, specialty product launches. At the same time, I think the stable margin performance largely because of the input costs remaining relatively lower. So we remain cautiously optimistic, but would look for the opportunity to buy when the market gives corrective downside into some of the quality stocks.
Cautiously optimistic, looking for opportunities to dabble into select names from the pharma sector, especially the specialty, chemical as well as specialty drug makers. But Kunal, what's the sense on the charts of Triveni Engineering and Finolex Cables if you track either?
Yeah, I do track both of them, and I think both these charts are now looking very attractive, especially for Triveni. Looking at the charts, some time back the stock was into a range, forming a bullish flag formation. Today seems to be a strong breakout day for Triveni. Engineering. The stock has moved from a base of 375, where this rally started off for the stock mid of November, start of December, towards a point when the stock completed this uptrend first and then consolidated at the 475 levels, which means this was almost like a 100-pointer initial rally and then a 40-50 pointer range for Triveni Engineering. The stock seems to have now confirmed a breakout yet again about that 475 mark, which means we could be looking at the next set of targets for the stock around at least 575 odd for the stock, looking at that 100-point up move previously. So I think that's another name which traders could look out for. Finolex Cables also, on the other hand, I think is now about to challenge its 200-day moving average on the upside. Now, what's interesting about the stock is formation of a double bottom for Finolex Cables. The stock at 1125 formed a double bottom for itself, and today's move indicates that that bottom would now act as a major support for the stock. So it's not yet confirmed a breakout, but I think after today's move and the likelihood of a major bottom formation for Finolex Cables, we could be looking at a further upside till at least 1350, 1400 levels.
Okay, that's the view coming in on both of those. Naresh, coming to you on the flip side, let's talk about two stocks that have been one of the top losers in today's trading session. Give us a sense of what you're seeing on the charts for KEC International as well as Torrent Power.
So KEC International has been in a strong uptrend. So for now, after that recent move from 1050 to 1300, looks like a consolidation still in place. So not really a bad indication. A dip to 1050, 1100 would actually be a buying opportunity. Same is the case with the Torrent Power, wherein the stock has corrected already. Going back to 1300 is a very strong support. So 1300, 1350 would be a good buying price.
Out for those price levels, keep an eye out on those two names. But Deven, I was just going through some of the stocks which have done well this year, and the theme that stands out is financialization of savings. I mean, BSE is up, but if you look at the last 1 month or so, KFin Technologies has been doing quite well as well. Have you tried KFin by any chance? Do you have a view or any other name from the entire sector and the theme?
The overall, I think the financialization story is definitely helping the stock exchanges, the depositories, the registrars included, and probably I think the peer participants who are actually also connected from outside this, who are the AMC companies at the same time because of the larger flow of money coming through the mutual fund into the market. So to a greater extent, I think this entire space remains absolutely a strong area. And as we see the progress happening from $5 trillion economy and $5 trillion market capitalization going to $15 trillion market capitalization by 2035-37, I believe that this is where probably I think you are going to see the maximum amount of participation from some of the financial market intermediaries into the market. Of course, I think at today's point of view, I think if one looks at it, I think most of the things are priced into the current market price. But as we always get opportunity during the corrective markets, I think that's where one would like to look at some of these companies which are really looking interestingly positioned from investment perspective with a roadmap ahead for next 10 years.
Okay, interesting take coming in over there, Deven. Kunal, coming to you on a year-to-date basis, some stocks from the consumption space overall have done really well, the likes of Trend, Zomato. You have a Kalyan Jewellers up there. Voltas has joined in with a 70% gain year-to-date. It's looking good for some of these companies. Give us a sense on what you're spotting on the charts for Trend and Zomato, because both of these have individually seen quite the run-up of more than doubled in share price over the last year itself. So tell us what's the outlook going ahead as well.
It looks like that the trend should continue for both of these names. Now, we look at trend first, that how the stock from previously I think 1500, 1600 rupees just about I think 2 years back went up to almost 8,000 plus levels, and from those 8,000 plus mark, the stock corrected more than 20%. So what we've seen this year is not just the stocks making new high for themselves and moving up significantly higher. We've also seen second half of this year, many of these stocks which have been huge outperformers, they've gone through their fair share of correction. So which means now that the risk reward would start to look a lot more attractive for these names, for someone who's looking at a longer term time frame. But you also have to be ready for many of these stocks to get back into a potentially time-wise consolidation, because when stocks run up 3x, 5x, 10x in a very short span of time, there's bound to be a phase where for a few quarters these stocks may consolidate or get into a time-wise correction. So I believe that there could be a possibility that trend could be one of the stocks which may get into a time-wise correction. However, I think at 6,500, 600 levels, we've seen ample evidence of support for the stock price, so that could become a very good entry point. Zomato, I think on the other hand, from the earlier names which you mentioned, that's another stock which looks fairly attractive, and especially with the point that the stock has already gone through a 15% kind of a correction from 300 plus levels towards 255, 265, which was the recent support for Zomato. So I think closer to 265, Zomato also could be a very good long-term buy.
Okay, Zomato is something which could be a long-term buy, but time now to take the closing trade ideas from our technical experts. Naresh, you go first.
So, liking ITC Limited, the stock is trying to make a short-term breakout move above the 480 mark. Looks interesting, relative strength as well. Stop loss at 475, target price of 487 on BTST and maybe 500, 520 going forward.
Your closing trade idea?
I'll go with the buy on Page Industries. That's a chart which is looking very attractive, especially after the last 2-3 days of a very mild correction for Page Industries. So expecting the stock in this rally or in this leg of up move to rally by at least another 5% to 7% further from today's closing.
Okay, PH Industries hasn't done much otherwise, but perhaps on the charts it's looking good. On that note, we'll step into a very short break, but before I do that, let me thank Deven for joining us today and talking to us about the fundamentals of the market, and season's greetings to you from the entire ET family as well. But for now, a bit of a red on the screen. Let's see whether Santa paints the town red or green.